Have you ever had an experience where you've wasted hundreds of thousands of dollars in one go? Well, hopefully the answer is no, but if the answer is yes, hopefully it's on a tale worth retelling, a story that you can break out at cocktail parties and wow all your friends with your profligacy. But in today's video, we're going to talk a little bit about a common misconception and a few things you might want to consider as we head into what's going to no doubt be an interesting tax season 2025. Hi, I'm John Norberg, and welcome to the Financial Prof Series. So in today's video, we're going to talk about tax prep versus tax planning, and what's the difference? You've probably heard of both, so let's break it down a little bit, right? Tax prep, what is it? Fairly obvious, right? It's your accounting team who goes in and does all the forms necessary once they get the data from you, which can be a chore in and of itself, and basically submits all of that to the IRS, pays your taxes, and end of story. It is necessary, at least if you want to avoid jail time, and it's something that most people have either done themselves or at least had someone do it for them since the time that they were young adults, right? So that's tax prep. Tax planning, on the other hand, is not necessary, but it is something that I feel is underutilized, especially by people who are more successful. It really just is a difference of, let's just say you're driving a car down the road, going from point A to point B, and tax prep is like looking in the rearview mirror at what's happened, whereas tax planning, that's looking out the windshield, that's what's coming down the road. Again, if you're driving, you need both elements, right? If you're going to get to your destination successfully and in the most efficient manner possible. But tax planning is looking ahead, right? What can we do to make this the best, the most comfortable, the most efficient journey possible? So let me give you an example. Tax planning, right? Tax prep, again, it's just filing the paperwork with the IRS, essentially. Tax planning, an example would be, I talked about in past times, the Roth conversion. So many people, unfortunately, have never even heard of it, or if they've heard of it, they thought, yeah, that sounds interesting, and maybe noodled on it for a little while, but never actually pulled the trigger on it. But once you pull in some actual tax planning to see what it can do for you, I have a client, for instance, who I talked about in a previous video. We were able to show how they were going to save tens, if not hundreds of thousands of dollars over the next couple of decades by putting in place a strategic plan to convert parts of their pre-tax portfolio into Roth, while also maximizing any currently available Roth opportunities. Obviously, it's not a guarantee, tax codes can change, but based on projections, we were looking at a tax savings of, again, literally hundreds of thousands of dollars. So, Roth conversions would be an example of something that's certainly not necessary when you're preparing your taxes. You could live your whole life and never do one, but a tax planning element that can really help save you money. Let's give you another example, right? I work with a lot of real estate landlords in my business, and part of being a landlord is losses, right? Maybe a roof burns down, half the building goes up in flame, or heck, the whole building. But more likely than not, hopefully something catastrophic doesn't happen like that. But for whatever reason, the buildings need a lot of preparation, maintenance, care. All of these take money. And when you net it out at the end of the year, oftentimes as a landlord, especially if you've got a large portfolio, you are generally looking at a loss, at least some years, especially if there's a lot of vacancy. But unfortunately, unless you're a real estate professional, you can't use that loss to deduct against non-rental income, right? Kind of a bummer, especially if you're looking at a big loss. So let's give you an example. I've got a client who right now, they're a little bit older. They're actually retirement age, but they've both got a sizable portfolio of rental properties. And these rental properties are generating, let's just say, I'm going to change a few details here because this couple watches the channel. And let's just say that this portfolio generates around $50,000 of loss on average the last few years, and is probably going to do something somewhat similar in the next few years. And let's say that through all of their other means of income, they're raking in about $250,000. Okay, great. What we're looking at, working with their tax accountant, their CPA and accounting team, is whether it makes sense to make the spouse, the wife in this couple, a real estate professional. Now, this wife is not employed in the traditional sense, but by becoming a real estate professional status in the eyes of the IRS, what that could allow you to do is then take those rental losses that they're generating in their portfolio and use them against other forms of income, like what the husband is bringing in from his different sources of income. And let's just say the husband, again, making $250,000, You could, by generating $50,000 of losses as a real estate professional, which you can now deduct against that other source of income, we're talking about a deduction that could start to approach $20,000 or so per year, given current tax brackets, right? So this is just one quick example, based on a real life example, by the way, of how a tax planning element, as we sit down and look at every piece of the puzzle together, not just the investments, not just the tax preparation to make sure you're staying square with the IRS, can really begin to add up, because that's just 1 year. Let's say we take that out over the next 10 years. Now all of a sudden, if everything remains the same, that couple has probably saved multiple hundreds of thousands of dollars that they would not have otherwise, because of a couple of simple tax planning pieces that we looked at together, including making that spouse a real estate professional from the IRS perspective. So if any of these sound interesting to you, or if you thought, why isn't my current financial advisory team doing tax planning for me? Then give us a call or drop us a line here online. We would love to hear a little bit more about you and what goals you're working towards. And in the meantime, I will see you out there.